Well, it's definitely a weak day to the trading today. 200 points of a knockoff coming in. 24,176 is where we're currently at. Look at some of the heavyweights like an Interglobe Aviation, like an M&M, Asian Paints, Infosys. ICICI Bank itself has fallen about 3% in the last two trading sessions alone. Bajaj Finance, Kotak, Eicher Motors, HDFC Bank, it's all weighing heavy on the markets. On the flip side, though, it's a very defensive tilt, which is clearly visible in the markets today. Look at some of the pharma names. You've got a Cipla, you've got a Dr. Reddy's, which is actually holding out. ONGC, the oil trade, clearly stands. And Nestle is seeing some push up. So about a 1% uptick is what that stock as well is up to. But the one stock which has been flying high of late has been MTAR Technologies. And we've got Srinivas Reddy, the managing director at MTAR Tech, joining in on the show right now to talk about the latest Bloom Energy pack that they've made. Mr. Reddy, great to have you today on ET Now. Thank you so much for your time today. Firstly, I wanted to talk about, given the large orders from Bloom Energy, tell me what is the visibility that you have beyond FY27? And are we expecting a stabilization or further acceleration in demand as Bloom expands its AI data center business?
I mean, there is a huge demand for sure. There's no doubt about it. And it's not for just 1, 2 years, it's for years to come. And we are expanding our capacities based on that. And it's more on the demand side, and we need to just execute. So we are working towards that, and we're very excited about this. We have been working with our customer for more than 14, 15 years. And we have done a lot of innovative things together. And now we are right up there in terms of ramping up, expanding our facilities, and ramping up to the extent what is required over the next 5, 6 years. That's how we are planning right now.
But what is the Capex commitment, the commissioning timelines, etc.?
We are looking at the initial expansion is done already. Then we are moving to the major expansion, which will take about 9 months to 12 months. So that's what we are looking at right now.
And what's the risk like of Bloom looking at other suppliers, just given the fact that they are also growing at a very, very fast clip?
It's not about the other suppliers. It's a technology-based stuff. So it's not, the learning curve is very steep. So the best thing is to ensure that MTAR ramps up as quickly as possible for Bloom. And that's what we're looking at right now. So we're not concerned about that.
And therefore, you will therefore have the onus of putting out larger capacity, right? What's the Capex pipeline looking like, and how do you fund it?
See, it's a very large expansion, but we are going, it's also about training of employees and very key technicians out there. So we are working on that. So it's a very large expansion. I can't spell out the numbers because of the NDA what we have signed, but it's a huge expansion which we are planning. And the Capex also is we are working out all the Capex details. Already the plan is finalized. It's only a matter of implementation. So we're looking at by March of next year, the new facility would come into play.
And just so that I get a sense, what does 1 gigawatt of order wins for Bloom do to your top line? If you can give us some color. And what's the execution timeline looking like from a Bloom perspective? Because they have to deliver a large 2.8 gigawatt order. Give us a sense with regard to timelines.
No, the timeline is like the sooner we do, the better it is. It's not about, it's all about how soon we can do it. And it's not about 2.8 gigawatt. The order backlog is way too huge for the customer, and we are working continuously to ensure that we meet those timelines, which are, it's not a long cycle item. So we need to really work towards adhering to those deliverables by increasing our capacities, which we are sincerely working on right now. So I can't go into specifics, but that's what it is. So there is a huge amount of responsibility out here, and we are sincerely working towards that to ensure that the customer is completely satisfied with the deliverables.
I want you to tell us about the other verticals as well, and how is it that you're planning to increase the revenue share from verticals like nuclear, space to diversify?
Yeah, see, the nuclear, we have a very, very strong order book right now, as all of you know, and it's going to grow even further and further based on the kind of reactors that are going to come in. So we're really very excited about that. This situation never happened in the past. We have the highest order book in nuclear division till date, and it's going to grow even further, the order book. So we have the facilities in place for nuclear. We have been working with that for the last 35, 40 years. For the first time, we are seeing this, and it's not going to end here. It's going to be a continuous requirements moving forward. And obviously, the space it depends on the number of launches ISRO does. So we are supplying all the engines to them. So we continue to do that. But what is more exciting, also exciting for us, is on the aerospace exports that we are doing with various MNC customers. We are really surging ahead with that in a big way. So that's where we are today. So we are growing up in various other verticals as well. It's not that we're just working on fuel cell, but we're working in a number of other verticals as well.
Mr. Reddy, you've guided for 50% growth in FY27. You clearly have a very long and a very strong runway. I'm trying to understand, as the base goes higher, can you continue to grow at 50%, or will that clip come off?
That clip, I don't think, will come off.
Okay, and what's the visibility like? 3 years, 4 years?
I mean, see, you can't talk about 3, 4, 5 years, right? So if you look at the next 3 years, I mean, the 50% growth is very comfortable for MTAR, the kind of order book we have and the kind of demand that we are generating in terms of what the requirements are for various customers. So we're pretty confident about that.
Understood. And what would say the mix look maybe 3 years from now? So if you grow at 50%, you'll probably be at 900 crore FY26, you'll be at 1500 crore FY27, and thereafter maybe 20 to 50 and 3500 crore in terms of top line 3 years from now. What would the split be between your various verticals?
No, we have a number of verticals. It's just not the fuel cell. We have the nuclear, we have the space, then we have the aerospace. We are entering into oil and gas as well. Recently, we got order for the building of the data centers from another company as well. So we are into multiple spaces, and I can't tell you the exact split right now, but it's a very comfortable kind of a split among various verticals. Obviously, the fuel cell will be much larger, but the other absolute numbers are going to grow very drastically over the next 3 years. So we are pretty much on track with that as well.
I want you to tell me a little bit, Mr. Reddy, about, this 10-year long-term contract with Weatherford as well. Many often wonder whether oil and gas as a vertical is going to be the fourth pillar for MTAR.
No, it is. I mean, it's something which we worked in the past about 8, 9 years back. So we are used to it. We know exactly the technology and how to do it. So it's not about only one customer. Like we also have the other customers as well in oil and gas we are working on. So that plant is going to we already done the first articles and we got qualified as well. And the plant is going to get commissioned by September. It's a state-of-the-art plant, and a lot of people have been trained already in this line. So that's going to be a good growth engine for MTAR moving forward, along with the other verticals that we're working on right now.
And what should the margin picture look like, sir, as you continue to scale up certain segments? Of course, the others do very well in any case, but give us a sense of what margins should do.
See, the margins are going to definitely improve a lot. We have been spending a lot of cash on building the management bandwidth over the last 2 years, trying to increase our capacities, working on various first articles for the new customers as well. So whatever margins we are looking at, they'll keep improving year-on-year basis. Obviously, one is the growth in the revenues, and obviously having a greater operating leverage, and also the product mix is going to be very good moving forward as well. So margins are going to improve year-on-year basis, is what we can say right now.
So would it be 25%? Would it be more than that? Could you probably give us a ballpark? I'm not asking you for an absolute number, which I will hold you to.
No, I mean, we're looking at probably next year, we're looking at between around 24%, around that range, plus minus or whatever, 100 basis points, but it'll be much better than that. So that's what we're looking at.
Okay.
And
Mr.
it'll further keep improving year on year. It will improve. The margins further will improve from the subsequent years as well.
Okay, Mr. Reddy, great to have you today on the show and so candidly speaking with us. Your stock, of course, has been a high flyer, doubled in 2026, and I think